My name's Cody Dyreng. I work in the Richfield office. I'm excited to be here today only because my paycheck depends on it. I wanted to tell them no, but they would have stopped sending my paycheck. I've been asked to talk a little bit today about what to expect and what you need to bring when you come in to see a loan officer such as myself and to inquire about a loan. First, we wanted to just give a bit of background about Western AgCredit and what we are and how we got started. We're part of the Farm Credit System, which was actually started by Congress in 1916. So next year's our big 100-year anniversary. We were started by Congress to help the farmers, and that's what our goal is. Our mission statement: to provide the most dependable source of credit and related services to agriculture in the rural community. A little bit of a tangent here, but on the second part of that, the rural community, we've done loans for people who are farmers like yourselves. Maybe they're going to start a little business on the side that's not a farm-related entity. In some instances, not all the time, some instances we can actually do those because we're here to help the rural community. We kind of talked about that. We're a little running behind, so I've been told to speed this up a little bit. So if I skip some of these slides, let me know. Here are our 7 cooperative principles. I'm going to talk about number 2 for a minute, democratic member control. We're set up as a co-op, and so everybody that borrows from us has stock, and we're going to talk about stock a little bit later. But we are governed by our members and board members that are elected from our members' votes, and so our directors who are elected have a huge part in our number 4 in our autonomy and independence. And so we have producers who are cattlemen, dairymen, hay growers like yourselves sitting on our board. They're making decisions for our company that are going to affect them just like they're going to affect you. And so I have a lot of faith in our directors and how our company is set up and how it is ran and how the decisions are being made. Give you a second to read through that. That bottom bullet point, we're going to go into a minute of that. One thing that I like, before I worked here, I worked at a commercial bank. And one thing that I like about my job now at Western AgCredit versus my commercial bank is we're not trying to ding you guys with fees on every time you turn around. And that's what I felt like at a commercial bank. Really the only thing that we charge is in order to participate in Western AgCredit, you have to own stock in the company. Usually we do 2% of the loan with a maximum of up to $1,000, but with agriculture the way it is, I mean, one piece of equipment will take you up to that, $1,000. So you hit that $1,000 stock pretty quick, and then after that you're no longer charged stock. Just gives a little bit of an example. I don't know what you can buy for $10,000 anymore, but if you were to go buy an old disc for $10,000, 2%, you'd pay $200 in stock. Here shows, this is a little more realistic. You want to go buy anything, it's almost 6 figures nowadays, and so you'll hit that $1,000 limit pretty quickly. Once you pay off your loans and you no longer have loans with Western AgCredit, that $1,000 in stock or however much you've paid into is refunded to you. So yeah, we might collect $1,000 and it comes out of your pocket up front, but once you are no longer a member, the stock's refunded to you. You get that money back. And here's the other thing that I like about our company is since you were all members, we do a program called the patronage program. Anybody here ever received a patronage check from Western AgCredit? That's a pretty good day, right? The guy shows up and hands you a check, and what that is we keep our rates so that we can ensure the financial stability of our company. And at the end of the year, we give some of that back to you. Like I say, we're not a commercial bank where we're trying to get a stock price or we're trying to have our financials look good. We need to be fiscally responsible, but we try to return a lot of our profits back to our members. Historically, maybe just skip to this next slide. That's kind of the patronages that we've paid over the last 10 years. You kind of see in 2008 and 9, that's kind of when the economy kind of started tanking and some things in agriculture weren't going so hot. We cut our patronage back to around 22 basis points. But we're making a very concerted effort now to keep that patronage around 75 basis points. So to put it in simple terms, if you have an operating loan and you're paying, say, 5.5% on it, after your patronage comes back to you, you take 75 basis points off that 5.5% rate. Your effective rate is really 4.75. So it's just a way for us to ensure fiscal responsibility and then return the profits back to you at the end of the year.
A question.
Yes, please.
Refund on the dividend. Some businesses take 20 years to give your capital stock back. You're within weeks, aren't you?
Yeah, we pay it twice a year. So we do that usually in April and in October. And somebody can help me back there, but usually one of them's a little higher than the other one. One's usually like 40 basis points and one's a little like 35. Is that, Darren, is that kind of how that works? A little bit bigger payment in the spring maybe? So, but yeah, we do it twice a year. Good question. If there's any more, please speak up. My main purpose is to talk about a loan and what to expect and what to bring if you want to come in and apply for a loan. So we're going to go through some of those steps here. First of all, we need that first little arrow says we need a signed credit authorization for all parties. One of the C's that Burke talked about was character. Part of that character is pulling a person's credit report. We don't have to do that for every loan. My last job, I had to do that at every loan. We do it maybe once a year or so. We don't want to, do too many credit inquiries for each individual, but we do have you sign a paper. It's mainly just has like your birthday, your social security number, a couple things like that, your driver's license. The state of Utah requires us to have a driver's license for a lot of our collateral, UCC. We're not going to get into that, but we do require a copy of your driver's license. And what that does for us is if you might have seen situations where the father's name is William Johnson and his son's name is William Johnson, but he goes by Bill, and then his son's name William, but he goes by his middle name Todd. You know what I'm saying? So I know this happened in my last job. They went back and said, well, you signed this loan, and says, well, yeah, that's my dad, William. That's not me, William. You can't take that tractor. It's not mine. So the way that the states resolve that issue is we go by whatever name is on the driver's license. So that's why that is required. Then the financial information. We're going to go over this in a little more detail. Not all of our loans at Western AgCredit require the same amount of information. So for example, the smaller loans, like maybe say you're buying a tractor for $80,000, we're not going to require the same documentation on that small loan as we are $1 million real estate purchase or something like that. So medium-sized loans, 3 years, I wouldn't worry about gathering up 5 years. I don't know if we are going to require 5 years too often, but usually we like to get one on our smaller deals and then 3 years tax returns on the bigger deals. One important part, and there's a whole bunch of slides in this, and I might skip through some of them. It's good to have a plan in mind, and I think all of you make decisions based on you've thought it out. You've thought a well-out plan, and you know in your mind what you're going to do. I'll be honest, when I put this together, I had it in my mind what I wanted, but what I didn't do is I didn't write it down on paper. If you come to the loan officer, the guy like myself, and you have a plan in your head, it's more impressive to me to have that down on paper so that when you leave, I see what your plan is, and then I know what we're talking about. Another thing I like about Western AgCredit versus my first job was I have actual lending authority here at this job. I can approve some loans. Sometimes I think they gave me too much. I'm a little nervous to think I can approve some of these loans on my own. They gave it to me in a hurry. My old job, I didn't have that responsibility. So your presentation to the loan officer is important because our decisions are made pretty local. I mean, I can approve more than I should probably, and if it's over my limit, my manager, he can approve up to $2 million right there in my Richfield office. I just walk to him, and so your presentation and how you present yourself and your plan to your lender is crucial, especially if you're kind of your first time. If you've been with them forever and you've done loans with them forever, you don't need to go put it on paper. They pretty well know your operation. But putting a plan on paper, I think, is a very crucial point. And don't be nervous if you don't really know what the plan is. Come down and sit down with a loan officer and say, here's what I want to do. Will you help me come up with a plan? And they'd be happy to work with you to put that plan together. Part of the plan can be cash flow budgeting. Budgeting is important. It's maybe not crucial, but I like having a plan, and I like seeing a guy that's thought through the plan and how that plan is going to affect his finances, how he's going to pay for this, how this decision is going to either positively affect his income, or maybe at first it's going to hurt his income, but in the long run, be a positive change for his income. Think through some of these things and have a written plan down. It's impressive to the loan officer. Again, some of the stuff I'm skipping over because I just tend to rattle on before I get ahead of myself. Lots of things to think about. This bottom one's kind of been an interesting one here this year. Guys have just kind of gone and sold their hay wherever they wanted, and now all of a sudden they can't sell their hay. What's their marketing plan now? Sometimes we don't think these things are important. No, so-and-so usually buys it, or I can send it down to California. But think through these steps. How am I going to produce my product? How am I going to market my product? And this is a good example. On developing a budget, how is your plan? How is it going to affect your costs? Is this going to make you operate more efficiently? Is this going to, maybe now you're going to, you want us to get more equipment and do more dry till instead of spraying chemicals. Maybe you're going to go to chemicals and no-till. That was the word I'm looking for, no-till. The wheat farmers that I used to finance, that was a big deal for them. Think about these costs and know your operation inside and out so that you can answer lots of questions. Burke already went over these key ratios, so I won't spend a lot of time on those. Kind of already mentioned that. So once you've gone through this, I thought it might be helpful if we kind of understand the loan process. So once you come to me and I have you fill out this little information with your Social Security and that, you presented your plan to me, you've given me a copy of your driver's license. I thought it would be helpful for you to understand the loan process so that you know what I'm going to be doing, and maybe that'll help you know what some of the information that you need. 4 steps. So let's talk about the purpose. A lot of times, have you ever gone in and the banks, you say, I need about $50,000, and they say, why? And like, none of your business. This happened in my old job a lot. Why do you need to know everything? I'm like, well, you laugh, but it happened all the time. I'm like, well, what you're doing on your operation, it affects a lot of things. So when we sit down as loan officers, I print out a report. I know I did a pretty big loan here a little while ago, and it was like, this is legal size paper, the 14-inch one, and I think it was like 8 pages of crap that I typed up. We put a lot of time and a lot of effort into covering our basis, and the reason we have to do that is our loans are audited. We hire auditors to come in and check our loans to make sure we're making good, quality, safe loans. So we have to sell this story to the auditor, and we hire auditors, again, just to be fiscally responsible. So if your loan officer is asking lots of questions, it's not to interrogate you, it's not to put you on the spot, but we have to write up a report. And, the larger the deal, the larger the report. And so we need to know, what are the loan proceeds for? The difference between replacement or expansion. Is this, you need to buy some cattle. Well, is this going to increase your herd, or are you going to cull your herd back and these are just going to be replacements? How does that affect your cash flow? Well, if this is an expansion and you're adding 50 cows to your herd, now you're going to have hopefully another 50 calves or 48 calves that we can figure into your income projection, versus you're going to cull back and replace them. Well, now we really don't have that extra income coming in. Does that make sense? We need to know these things because to help us learn this big report we got to do. And another thing that Bert hit on briefly was the type of loan that you're doing, we're going to try to match that up to help you structure it the right way. Burke mentioned a cattle loan going 7 years. Well, yeah, we can go 7 years on cattle. Might be better to go 5. I know in my old job I financed a lot of trucking companies, and if the trucking company had to finance their trucks over 5 years, they probably weren't going to make it because the trucks depreciated faster than they were paying them off. If a trucking company could pay them off in 3 or even 4 years, those are the guys that are still in business. So we want to know what you're doing so that we can help structure this loan the right way so that we're not getting you in something that's not going to benefit you in the long run. Sometimes maybe the payments might be a little tougher, might be a little harder to bite off, but we really have your best interest in mind, and we'll try to tailor our loan to what your needs are. Another thing, the bottom one, eligibility. Western AgCredit is in place to help support and grow agriculture. So if somebody comes to me and they want to buy this nice piece of farm ground right along the freeway, and the guy's never farmed in his life, you can tell he just wants to he's a developer. We don't finance developers. So there's eligibility issues, that go into this. So, that's why that's on there is we're here to support agriculture. We need to make sure that your purpose is an agricultural purpose and not some other deal. I won't spend a lot of time on the balance sheet because Burke talked a lot about that. One thing that I will say, and I might be stepping on somebody else's toes here, is on the balance sheet. How many of you use like QuickBooks or Peachtree or some of those things? Those are great programs, and they really help with your income and expenses. They're not so great on the balance sheet side. Corey, have you seen that too at FSA? Sometimes they work good if you spend a lot of time updating them. If you're in there keeping track of your inventories, it moves in and out, and your market cattle, you had those on in September, but in November they're gone. And have you updated your balance sheet? So it's changing a ton. So either be really dedicated to it and spend a lot of time at it, or I don't know the program that well, but don't kill yourself over it, because what we like to do a lot of times is I like to get year-end financial statements just to keep it consistent, like Burke talked about. You could sit down with your loan officer, you could look at your last balance sheet, you could fill out a new one in 10 minutes. If you have your numbers and your inventory numbers ready, we can do something in 10 minutes that you could spend hours doing in QuickBooks. Ross, am I off to say that? Is that acceptable? I don't want to preach false doctrine up here, so. One more thing. Sometimes we get balance sheets from accountants, and accountants, they're focused on book values, and they're tracking depreciation schedules. Well, they depreciate your equipment out in 4 years so that you can save on taxes, but the truth of the matter, that tractor's not worth $10,000. Some of these tractors have gone up in value, so we'd like to get a market value statement showing what a true piece of equipment's worth versus a book value statement that doesn't really show maybe what your assets or your liabilities are. Okay, income statements. We talked about these a little bit. Tax returns or a profit and loss statement, as you can see there, are acceptable. This is where the QuickBooks and that really shine, is when you can go to your computer, you don't have your tax return there. We can use that statement out of your QuickBooks to track your income and your expenses. That's usually what you're giving to your accountant anyways, and we can use those. Those are acceptable. Burke talked a little bit about history and why we need that. I had an interesting case the other day. I went to talk to one of our really good borrower of mine down in Minersville, and he gave me his financial statement, his income statement for last year, and he gave me a year-to-date statement for 2014. Now, this can go both ways, but in his example, this guy prepays all of his expenses for tax purposes. He prepays a whole bunch, like $300,000 worth of expenses in December. So his income statement in September looked really good. All of his expenses were prepaid. So year-to-date statements aren't always the best. On the flip side, a guy his income is selling calves, he sells those in end of October. Well, he's probably not going to have a whole lot of income in January, or excuse me, in July, because he hasn't had his income. So current year-to-date statements aren't a big necessity. We're looking for historical statements and a plan so that we can put together a projection. In all of our underwriting, I think this is probably where, I don't know, where we spend most of our time when we're crunching the numbers anyway. I mean, it takes me 5 minutes to take your tax return and plug it into our computer system, but we spend a lot more time and put a lot more emphasis on what's going to happen this coming year versus what happened in the past. Okay, we need to know what happened in the past, but we need to know what's going to happen down the road. And so we spend a lot of time on the projections, projecting what your income is going to be in 2016. This is where your loan officer is going to be asking a lot of questions like, how many acres are you farming? How many, what do you have in, what's in wheat, what's in alfalfa, what's in corn silage? They could be asking you a lot of questions. Again, it's not interrogation. It's just us understanding your operation so that we can make this projection and have it in file. So it helps us make decisions. On a cattle guy, we ask a lot of questions as far as how much feed do you have to buy? Are you out on the open range? Are you on the mountains in the summer? And where do you winter? There's all these different things that we'll be asking because we have to paint a pretty good picture. I have to sell it to my boss to make sure the loan's approved. I have to sell it to the auditors to make sure that we're being fiscally responsible with our loans. We spend a lot of time on projections. Any questions on these projections? I mean, have you had a loan officer asking you a lot of questions and you're wondering why? One of my customers is here. I had this conversation with him the other day. If I'm calling and bugging you a lot, you'll know why, because I gotta write a book report on you. I'm right back to what I was doing in 5th grade, book reports. But actually, the projections is probably my favorite part of of being in the office. It's not the favorite part of my job, but I like this part of because you have to think, you have to work through everything. On our dairy loans, some guy that's a lot smarter than me made this huge spreadsheet tracking cattle coming in and out, tracking cull rates, tracking our retention, how well we retain our heifers. The dairy loans are pretty complicated, and we spend a lot of time on it. It really is my favorite part, but it does take a little time and some effort, but I think that's why I like it. Burke mentioned this too. Collateral analysis. I think, what was that last one called? Financial analysis? Looking at the collateral analysis. Burke mentioned we don't want to give a loan term that outlives our collateral. We're going to talk about some different types of collateral here and break it down a little bit better. First, we'll start with real estate and kind of the process that we go through on our real estate loans. Generally, when somebody comes into us, we like to know, the first thing we do is do our financial analysis, make sure that we're going to approve the loan. Once we're pretty confident that we're going to get the loan approved, we're going to order a title policy. You guys know what I'm talking about when the local title company. Maybe you're getting your property tax notices in the mail right now. It's a good idea to file those, put them somewhere where they're accessible, where you know where they are, so that when you got to dig them out because your loan officer's interrogating you, you know where they are. To order a title policy, we need to know the parcel number. That'll be on there somewhere on that property tax notice. That one big loan I did, I think there was 37 parcels. I mean, it took them a long time for the title company to search them all, but some of them are one parcels, could be 5, 10. Some of them are really big. They get kind of hairy. But a couple of things that the title company looks for is there has to be legal access to the certain property that we're taking. So if you own property or your neighbors own property all the way around it and you just want to put the one little piece right in the middle, it usually doesn't work, because if we had to foreclose, there's no way to get into it. We can't sell it. Nobody wants to buy it. So the title company makes sure that there's legal access to the property, either through an existing road, or maybe we have a lien right next to the adjacent property that has access, so we can access your property through the other one that we're have a lien on. Does that make sense? We have to have access. Burke also mentioned that we have to be in a first lien position. So if you've pledged your ground to FSA and there's some equity in it, we don't want to take a second behind FSA. We would suggest if you owe them a little bit of money, why don't we take that loan, roll it into ours so that we're in a first lien position. That makes sense? You understand lien positions? Once we have the title policy in place, then we'll order an appraisal. The reason that we like to have the title policy first is because the title company is going to address these issues, make sure that we have our ducks in a row, that we have access, that the lien position's right, before we send our appraisers out to do a bunch of work that's could be for naught if things aren't what they need to be. Also, the appraisal or the title policy will give us legal descriptions of the ground, so that we're not appraising the wrong field. We're not appraising your brush ground when we should be appraising your nice irrigated crop ground to the side, So we get legal parcels. Part of the appraisal process is platting all these out on plat maps, so that we make sure we have the right ground. A lot of times these real estate loans have water and water stock or water rights. Do we understand the difference between the two? Water stock has a certificate, a little share, it says how many shares you get. Water rights are filed with the state. Usually that's the underground water, for guys that have wells, that's more not a water right. Where water stock's usually surface water running through the canal, running through the ditch. Doesn't necessarily be, but having a copy of that water stock certificate we don't need to hold the original certificate up front, but just having a copy. I mean, it can be something as simple as taking a picture of it, and so you don't have to take it out of your house. You can leave it home in your gun safe. Take a picture, and you can email it to me. Same thing with your driver's license. Take pictures, and we're trying to go paperless. We've got about halfway through the process, so pictures, copies of any of this stuff are very helpful. Part of the problem is that we've seen before is you've transferred the water stock to your son's name, or the water stock's still in your dad's name who's passed away, and so some of those issues, they're better to be found up front so that we can get them straight away rather than get everything done and then see the water stock and it's not even yours, and like, oh no, now what do we do? So we like to get those up front. Water rights, if you have the water right number, it's usually, I think the number I got the other day on one was 18-381. So they're usually, I don't know how they number them, but the water right number or the water stock certificate lets us do a little homework before going out to do an appraisal. Another thing that helps the appraiser, and you might think this is cheating, and I kind of think it is too, the appraiser always wants a copy of the purchase contract. And you're going to think, oh yeah, so they can see what it sells for, then they're just going to give it that value. And there might be a little bit of truth to that, but the truth of the matter is, by you purchasing that ground, you're kind of establishing the value of ground going forward. And in fact, your purchase contract might be used for the appraisal we do next month on the neighbor's ground. This is what this sold for. I mean, that's how we value property, is what property is selling for. So if there is a purchase contract, it's very helpful for us to have a copy of that. The next, I might skip over this one a little bit quicker. You can kind of read through some of that. We take obviously livestock as collateral. One thing to know that is if say you're wanting to buy a new herd and you want to purchase cattle, you want to put them on a 5 to 7 year loan, and you're going to say, and the collateral is going to be the livestock, and so we're valuing it out. We're not going to value the calves. So say I've got pairs. My pairs are worth more than my single cow. We're not going to put the value of your calves on a 5 to 7 year loan, because those calves are going to be gone in, whenever you sell them, October, November. Maybe you background them until February. But you understand what I'm saying there? We're not going to put the value of calves on a long-term loan. Now, if you're coming for an operating loan and the collateral for your operating loan is livestock, that operating loans are generally 1 year loans. We will use the calves in that instance because it's a 1 year loan, not a 5 year loan. Does that make sense? Clear as mud. Just a note on our water stock loans. We do water stock only loans where we don't need to take real estate. A lot of guys like these because Water stock loans, you don't have to do a title search. There's no title insurance. I didn't mention that, but you have to pay a fee for title insurance. You don't have to have an appraisal done on water stock. It's a quick and an inexpensive way to get a loan in place. But we can only go 10 years on water stock loans, or real estate loans you can go longer term. So if you're thinking about buying some real estate, and if you can cash flow it on 10 years, you may want to consider a water stock only loan, that's available. Maybe I'm stepping on Darren's toes, maybe it's part of his presentation. Equipment loans, the most helpful thing is if you're buying it from a dealer, just give us a copy of that purchase contract, the sales invoice, whatever you call it, because that's going to show us the value on stuff you're buying from a dealer. We can use that value, whatever's on the sales price on that invoice, and so we don't have to go do a lot of other inspections. Those invoices have the make, model, and serial number, so we're not having to go out and crying through your greasy tractor, scrape off the tag on there and do that. It's very helpful. 5 years is the norm on used equipment. We can go up to 7 years. Most of our pivots are done on 10-year loans. We do our pivot loans are easy compared to my last place. My last job, pivot loans were a nightmare. I told them to leave when they came in, but we do a lot of pivot loans, and we do them pretty easily. Some of the other stuff we do is collateral, crops, accounts receivables, inventory. They're taken mostly on operating loans. I think the best example is up in Idaho, where a guy plants a potato on the ground, and that potato is our only collateral. That's all he's got. Those are kind of risky loans, because if something happens to that thing in the ground, we're in trouble. But we do take those as collateral, and maybe it's the greedy banker in us who like to get equipment or something a little bit more tangible on some of our operating loans. But if all we can do is crops, then we will. One thing to keep in mind too is, I think it's human nature for all of us to say, I don't want to put as much collateral. I want to put a little on there as possible. I'm not just protecting ourselves, but one thing to keep in mind is we kind of have a grading system on our collateral. Our computer kind of figures it out for us based on the information we put in. And the better collateral position that we have, the better the interest rate we can give you. So I understand the thought process of not wanting to put up more than you have to, but if you have an operating loan and you only want to put up crops, you may not get a good as rate as had you put on some more tangible collateral like livestock or equipment or something like that. Does that make sense? Something to think about. We don't always require it, but we can offer better rates if it's there. It is the normal policy of Western AgCredit to cross-collateralize all of our PCA loans. PCA loans are everything except for real estate loans. So, so if you have your operating loan and you also have a livestock loan, usually those loans are kind of tied together, and the collateral is pretty much the same for all those loans. That's kind of the fine print. Maybe I shouldn't be telling you our secrets. I'm kidding. It's not a secret. That's why we're telling you. There's some advantages to that. The interest rate is one thing that I told you. On equipment loans, I just did one yesterday. A guy called and said, I want to have this tractor released. I looked at his other loans together. There was plenty of collateral there. I released the tractor for him. He didn't have to pay me, I didn't charge him a fee. He didn't have to pay his loan down. But because he had other collateral on there, it took me 20 minutes to fill this out, and it's going to be released. Very simple. It also eliminates that, you go buy your tractor and it's $100,000. Bert kind of mentioned, we usually like to get some money down. A new stuff will maybe finance 80% if we had to. But if you have other collateral on that loan and we've got plenty of equity, we could finance 100% of that equipment because we have equity in the other collateral that's on those PCA loans. Does that make sense? And I should have said this on real estate too. Real estate, we want equity in it too. But I did a loan on a real estate yesterday, and the guy already had a real estate loan in place with lots of equity. I just had his appraisal reviewed. He bought this other piece of ground and used the old ground that he already had. He already had equity in this other ground that he'd financed 2 or 3 years ago, and I financed his new purchase on that equity only. This new stuff that he bought, there's no lien on it. He has it free because we had equity in the other collateral. Does that make sense? So if people don't want to put up other collateral, and I understand that, but it can help you make things quicker and easier down the road if you put up a little more than you need to. If you want to do financing on a single piece of equipment, that is available too. Again, this is kind of a review, but the key to the whole thing is communication. I've been here a year and a half, and I know every one of our loan officers, and I wouldn't be nervous going in to talk to any of our loan officers. Our goal, like we said in the mission statement at the very beginning, is to help rural agriculture. Now, we have to be smart about it. We're not just recklessly throwing money out, but our goal is to help each and every one of you, get to where you want to be financially. Sometimes, the hard part of my job is this guy wants to go buy some huge farm. Well, maybe he only qualifies for half of it. And I realize that the other half he may not have the opportunity to get, but we don't want to put you in a situation where you can't dig yourself out. And so communication is key. And just know that when you come in to talk to us, our goal is to help you out and to get you in the best situation possible. I skipped over some of this stuff, but I think you get the gist of it. Is there any questions for me before I sit down? Again, we're here to help you. We'll help you through the process. Don't be intimidated by it. I know the FSA folks are the same way. Their goal is to help you through the application process, and I would say just put as much thought into it as you can and put it on paper before you come in, and we'll be happy to help you. Thank you.